Hi, everybody, and welcome to Organizing Life's Daily Demands. I'm Peter Gordon. I'm the president of New York Financial Organizers, and we help people organize their finances. Essentially, we help them with all the non-investment side of finance. And the purpose of this podcast is to introduce people to other ways of organizing their life. And I have a wonderful guest, my good friend John Parisi, who is a life insurance agent with Northwestern Mutual. And I'd like to say hello, John. How you doing
Hello,
today?
Peter. Thanks for having me today.
My pleasure. My pleasure. So John and I actually go back a long way from, well, I've had different lives. He has been an agent most of his career, if not all of his career. And we met at a networking group called LeTip.
That's right.
Kind of like being a daily money manager. It's a terrible name, but it's a very good organization. and that turned into a B&I group. And and John is my life insurance agent. So, I mean, I want to run by some questions that you'll answer, but we should have a good take on the wonderful services you offer, and he does. So, John, tell us a little bit about yourself.
Well, Peter, let's see. I'm one of those people who took a job right out of college and has been there ever since. So today, coincidentally, today is the day that I started my training 36 years ago. Yeah,
36 years ago.
Yeah, and it's funny to hear the phrase insurance agent, because that is what we were called. You're right. Back in 1986.
I know you're not a broker.
Well, I am a broker also.
Yeah, you are.
Broker means you can represent multiple companies. Agent means you work for one company. But nowadays, we have basically morphed into financial advisors as we
absolutely
offer comprehensive financial planning. But technically, you're right. I am a insurance agent. Live in Westchester, married, 2 grown daughters, for the record.
Yeah, no. Why did you decide to become a life insurance agent?
So I was a finance major at Boston College, and I think the main reason is I wanted to be in my own business. I had the experience during the summers of college where I was a house painter, and it was actually a great business. I enjoyed it. I enjoyed sort of the managing of it, and it was a pretty good business. At one point, I had 17 people painting, and we used to paint like a house or two a week.
Wow.
Yeah.
That's news to me.
Yeah, sometimes multiple jobs at the same time. And I would.
And you were managing that?
Yeah, I would run in between to make sure everybody had what they needed, including lunch.
And this is while you were going to college?
Well, it was during the summers, but yes.
Oh, okay.
Yeah.
Okay. So you weren't running to and back and forth from class?
No, not while I was in school. And so I had that kind of in me that I wanted to run a business, but I also had it in me for, right or wrong. I didn't want it to be like a physical labor type of thing like I was doing and, wearing painting clothes. And so I looked for what I thought was a professional platform where I could launch a business. And, the reality is they interviewed on campus. So it was very easy. I saw what looked like an interesting advertisement on campus, took the interview. The office was located in New York, where I wanted to be. And, it was explained to me that I would build my own clientele. And it's kind of interesting now. Like I had the experience. I mean, I've had this experience multiple times now, but like, for example, today I'll be speaking with the child of a client that I've had for over 30 years.
What about my kids?
Well, that's right. Correct.
My clients.
So I remember when these children were born, and now they're grown up and in need of, financial services.
And so why Northwestern? Why did you end up? Was it as simple because they are on campus?
Short answer, yes. I wish I could say to you, oh, I did extensive
Just so
research.
people out there listening, he is not naturally lazy. I mean, that's why I love working with John. He's a very hard worker, and he looks at all the options. This was early in his career.
Yes. So, yeah, I mean, I didn't really know anything about the company at the time. It would have been great if I said, oh yeah, I researched it and selected the one that I thought was the premier life insurance company in America. As it turns out, I just got lucky. It actually is the premier life insurance company in America.
Absolutely.
And I have to say, I sort of stumbled upon it. I mean, I like what I heard from the beginning. They have excellent third-party rankings and have had it my entire career. So, that was part of the interview process, hearing about how good the company actually is, and how the platform was such that I would be what I wanted, building a business.
Sure. And I'm saying this for a reason. Did you have to take a test? Did they give you a test when you started?
Yes, they actually. It's very common in my industry. They give you I think you'd call it a psychological test.
Yes, they do.
Right? They want to know if your
psychological profile.
Yeah. They want to know if your personality fits. There's a lot of rejection, I think, in any sales role. But
especially life insurance.
Yeah. People I can't figure it out, but people don't want to talk about their mortality. I don't know. I find it interesting. So,
I by the way, I agree. And in my world, I don't talk about life insurance, but I do talk to people about their mortality. My clients are in their 80s, 90s. I have a client who just turned 100. So we're dealing with what's going to happen when they die.
Yeah, I think people like you and me help people deal with reality.
Absolutely.
It doesn't have to be like morose or depressing. It's just
not real. At all.
And
not at all.
And I would take it a step further and say that once people address needs, whether it's what you're helping them with or what I'm helping them with, it takes off the anxiety. They feel relaxed.
Absolutely. It's a wonderful feeling. I asked about why Northwestern, because when I actually have an MBA in finance, and when I got that degree, we were kind of in a recession and it was tough to find jobs, and professor said, oh, you should look at insurance sales. And I researched it, and Northwestern was by far the best company. And I also had an interview with MetLife, and they loved me and they wanted me. And then I went to Northwestern and I took that test. Oh, yeah. And I did not do well on that test. And I said to them, the manager of the office, who was so nice. And I mean, it was exactly as you said. It's a rejection issue. I've definitely grown since then.
Yeah.
But when
by the way, I don't think that test is foolproof.
No, absolutely not. But it's a start, I mean, and they were right. And I didn't want to do it. But
you've clearly been successful building more than one business.
Absolutely. Absolutely. But it's a funny story because I said to the guy at Northwestern, well, MetLife, I mean, I took the test and they said I did really well. And he said, MetLife is looking for anybody with a pulse. So, and that was my first experience with Northwestern. So when I met you, and I bought a number of different policies, I knew I was in the right hands. One of the things about life insurance that I don't think people understand is that it's a really good investment. Can you talk about that?
Yes, I would view life insurance as one piece of your financial puzzle, right? It's not something where I would recommend to anyone, you need to put all of your money in permanent life insurance. However, the opposite is also true. It's not wise to ignore it altogether. And if it's viewed in the right context as one piece of the puzzle, I think it makes a lot of sense. It brings predictability, stability, security, um, tax advantages. There's many advantages to having uh, permanent life insurance. There's also reasons to have term life insurance, and maybe we can get into the differences. But
Could you? I'd like to. Could you talk about, obviously as brief as possible? And there are a lot of different vehicles within the life insurance
sure,
product world. Just so, yeah. Can you tell me the difference between term insurance and whole life?
sure. So I would think of term insurance as renting and permanent insurance as buying. So starting with term insurance, um, you would have the right to have life insurance for a period of time, typically 20 years. There are some variations on that, but that's the most common version. And so that 20 years is sort of like a lease. But when you get to the end of the lease, the coverage expires. So term insurance is an excellent way of getting lots of coverage for the period of time when you are most vulnerable, i.e., you have a mortgage, you have young children. You can bulk up your coverage and keep the cost very low, like very low. Sometimes,
I love that explanation. When you're most vulnerable, that's great.
yeah, thank you. So why is it inexpensive? It's inexpensive because the insurance company knows they get out of the deal before the risk gets too high, right? Most people are going to outlive their term insurance.
Do you have
However,
numbers on that? Is there a percentage? Do you know?
it's probably north of 90%
I thought it would be
outliving.
even. Yeah.
Yeah. So, however, you don't know who it's going to, who are the unlucky ones going to be where there actually is a death claim. And of course, the insurance company does pay those. So the way I think of it is the risk is very low, but the consequences are extremely high if it actually happens to you, right? If you have young children and you didn't provide for them, their life is going to be different.
Absolutely.
Right? So that's term insurance, and we use it all day long. It's a great solution. However, permanent insurance is also a very good solution and usually works well in conjunction with term insurance. So in most cases, you have an underlying amount of permanent or whole life insurance that you'll have your entire life, and it will ultimately pay a claim because it is covering you for your whole life. When you have that, and particularly when you start earlier in life, you're locking in your age, you're locking in your health status for a plan you'll have forever. It can reach a point where you can stop paying in and it will support itself and continue forever. And when you have that permanent insurance, it goes a long way in your overall financial planning because it's a predictable amount of money that will be there when that event occurs. Whether that is needed still for your children or your spouse, or maybe now it's needed to pay estate taxes because things have gone really well and you have an estate tax problem. So it can be used for different things at different stages of your life. Okay. One other point on permanent is it also builds a savings, commonly referred to as cash value. And that savings grows tax deferred and can be used tax free. So it's another pot of money that can be used down the road.
And you could borrow against it.
Absolutely. So you can borrow against it. It's that would be a tax-free event. You can choose to pay the money back or leave the loan on the books and have it deducted from the death benefit.
It's very flexible. In my career, when John and I first met, I I had my own company, and then I became a partner with somebody. And what we did is we did something called key life insurance, and where we had insurance for one another, and the beneficiaries were our wives. And he was much older than me. So I bought term life, but he bought whole life because of the pricing was such that it just made much more sense. And we eventually sold the business. And when we sold the business, that one of our best assets was the cash value of that whole life account. It was really interesting.
Yeah.
And now jump ahead 20 years later, we just went through the same process this time with my son, and where we both bought life insurance with our wives as beneficiaries because we're partners, Jacob and I. And the other beautiful thing is that John mentioned that it makes a lot of sense to buy whole life when you're young. Yeah, term life is a lot cheaper, but if you can afford it, the premium is much lower if you start young, and that's why I'm so proud of my kids for doing that.
Yeah, so I believe that wholeheartedly, and can demonstrate that in telling you that I bought life insurance on my children when they were born, because you
Right.
lock in their health status, perfect health, and their age, which is actually considered age 0 for the first 6 months of life. Age 0, you're never going to beat that rate. And
Jacob, I have a grandson, and Jacob should do it for Isaac.
Yeah, I mean, now my kids are, Julie's about to turn 29. Those policies look great, all these years later.
We did that for Jacob, not with you. It wasn't my decision. And it was to just cover him for
this podcast is over.
It wasn't much of a commission, which is one of the things about starting it young. And yeah, no, it's really great. But we touched a little bit on this. Why do so many people have an issue buying life insurance?
I don't know. I find it a delightful topic. No, I think, I will say, I do think, talking about your own mortality is one issue that people have to kind of struggle with. The other is, there may be some underlying messages that were delivered from the parents or the grandparents. It's like a tradition passed from child to son, I mean, from father to son. And a lot of it is really just kind of a misunderstanding of A, how it really works, and B, there is a difference in the companies that are out there and the plan designs that are out there. So I would say it's very important that a person works with a competent advisor, a highly rated company, and this is important, the right plan design. They're not all the same.
No, absolutely. Let's talk about long-term care insurance, because that's something I recently purchased. Well, like in the last couple of years, Julie and I purchased long-term care. I work with people who are utilizing their long-term care, and I work with people who don't have long-term care. And I think it's, if you can afford it, because it's not inexpensive, it's a really, really marvelous investment, because you're going to use it. Most likely you're going to use it. And
70% chance that you'll use it.
Thank you.
Yeah.
That's a big number. That's
right.
A very big number. And I know, I have clients who are spending literally $30,000 a month on their home health care. And
wow.
It could go anywhere from 5 to whatever if you're really ill. And so tell us more about the long-term care insurance.
So as I know, Peter, long-term care expenses are not covered by Medicare. Medicare being the health insurance.
And it's unbelievable how many people think they are.
Correct. That's why I open with that. It is a misnomer that there's some government agency that's going to cover my long-term care expenses. Medicare is not going to do that. in the extreme circumstance where a person's assets are completely exhausted, then Medicaid will step in and provide services. But that is not a pleasant scenario. That is not a plan.
New York and New York State had a great solution for that, which is why I do what I do. And that's called community Medicaid, but that's changing. And so I wholeheartedly agree with you. That's why we're getting long-term care insurance, because you can't, it's hard to depend on that. Although it's the topic of another of another podcast.
Good. I will definitely tune in.
Yeah, you should.
Long-term care is a big problem in our country, really in the world, and
only getting worse.
Yeah, and I know it's really hard for people to kind of get their arms around it, but the odds of having an event are 70%. Those are terrible odds working against us. I can give you the example of my mother-in-law, unfortunately, did not have planning, and she had Alzheimer's for 7 years. And we basically watched all of her money go out the door.
Absolutely.
Right? That was not her intention. She had hoped to leave money behind. Didn't play out that way. My mother, who had a stroke a few years ago, has planning, and is in her own home with a full-time aide living there, and her long-term care plan is paying for it. And, that was a tremendous help and continues to be a tremendous help to the family. And sort of one less thing that, we, the siblings, had to decide about. Like, everyone is in favor of spending all of the long-term care benefits for mom's, benefit. So it puts a structure in place, and it puts funding in place. And it's been extremely helpful.
And it's one of the things we do at New York Financial Organizers is we help people navigate the long-term care reimbursement system. I just got an email today, a cold email from my website, somebody saying that her uncle is bedridden and he needs care, and she put it as, we need a bulldog to take care of our long-term care and Medicare issues.
So think about that situation. This is this person's niece, right? Not even child, not spouse. This is the niece stepping up to be her uncle's care advocate, very commendable. But that is not a small task. I'm sure she's feeling overwhelmed, which is why she's seeking out your help.
Yeah.
Rightfully so.
Right.
It is. I'm not suggesting that a long-term care insurance policy is going to solve everything.
Not at all.
But it does go a long way to helping what is otherwise a very, complicated and overwhelming situation.
Now, there's a good chance that this fellow has an excellent policy because he's older. So, really now, when we bought our long-term care policy, and I was very happy with the numbers, it's just a piece of the puzzle. It's not, you can't depend on it, as opposed to my old partner, who John knows, who had long-term care insurance, not with John, with someone else. He's got this crazy benefit where, and it's like, it's full coverage forever. It's pretty amazing. And the insurance companies recognize that they were made a big mistake, and they've made those adjustments.
Right. So now there used to be unlimited benefit periods. Now it's limited to 6 years. In most cases, 6 years is enough, statistically speaking. Most claims would be, satisfied within 6 years. But not all, certainly.
No, I have a client who's 100.
Wow.
And she turned 100 in May, and she's coming to the end of her long-term care benefit. However, she'll be okay, and we're managing it. She doesn't have a lot of money, but she has enough. And the question is, what's a lot of money? It's like it all depends on your needs. And these are huge question marks. We don't, and I think that's why it's hard for people to purchase the insurance, is because they don't want to contemplate what it's going to be like. But it goes back to the old adage, what is it? Fail to plan, plan to fail.
Yeah. Yeah. So
I always hated that.
I would say the best thing people should do is consult someone like yourself, and also consult a qualified financial advisor who can walk them through an analysis and a discussion and figure out what's right for them. I think one of the mistakes people make is they just sort of rule it out based on the assumption that, oh, that's going to be too expensive, I'm not even going to look into it. I think you might have been one of the people who said, after we looked at a plan, oh, wow, that's less expensive than I thought it was going to be.
Right. And absolutely. And that's one of the great things that you do, John. You walk us through, and with the programs that Northwestern provides, you see exactly how much it's going to cost, where the price increases are, and over time, and it's been through every product that I've bought with you, and that's incredibly helpful. And you do a wonderful job of it, and you're always there. And I always say, if you want the perfect life insurance agent, then you should see John Parisi.
Oh, wow. Thank you.
I honestly say
that.
You have, yeah, no, one of the things that always has impressed me is the nature of your office and how neat it is. And there's not a speck of paper anywhere, right. Which is not my office.
Yeah, that's more of a personality thing. I just can't quite do it any other way.
But it speaks well to what you do.
Thank you.
So we're almost done. I wanted you to tell us a story of a success, of what you consider a success from one of your clients by purchasing. I mean, it might not be a quote unquote happy story, but it'll have some kind of good ending, whatever that might be.
So, I mean, I could certainly tell you stories of delivering very large life insurance claim checks and how that has impacted the family dramatically for generations. I mean, I know I've delivered checks where those children have now gone through college and, are grown up and on their own. And, of course it was tragic in one I have in mind, where the dad passed away early, but, it was his dream that his kids would still have all the things he would want for them if he was there. And he made that happen with life insurance.
Right.
But I'm not going to tell you that story. I'm going to, since we're on long-term care, I think you'll appreciate this one. A 39-year-old female single parent of a teenager came to my office, and she was actually in the financial world sort of in an earlier career. So she was aware of things like long-term care insurance. And it was her thought early on, 39, I never want to be a burden to my teenage daughter. So we talked about long-term care planning. And, I'll tell you, at age 39, she was the youngest person to buy long-term care from me. Mm-hmm. Yeah, because most people do it in their late 40s or early 50s. And she was also my first claim.
Wow.
Yeah. So we had a very nice meeting in my office. She said, I definitely want to do this. I'm just not ready to do it tonight. I'm going to think about it. Well, we walked all the way to the elevator. She got on the elevator, and we were talking about various ways that we can, put coverage in effect. And then she stepped off the elevator, and she's like, you're right. Let's do it tonight.
Wow.
And we went back to my office. This was like 7 o'clock at night. Filled out the paperwork. She put down some money, submitted it. Before she was even approved, she was in a train accident, like just commuting. And it was, terrible situation. And she had a spinal injury.
Oof.
And to Northwestern's credit, they did not even blink. They said, well, that accident, because she had signed the application and put down money, it kind of stops the clock on the collection of information. So the accident doesn't count. So they approved her and then started paying a claim. And she's still on claim today. It's been years.
So there's a lot of layers to that story. Yeah, I mean, it's a great story. One of the things is harkens back to why you work for Northwestern. That's the kind of company they are.
Right. There was no like, how can we get out of this?
No.
Nope.
No, that's great. And just, life happens and we just don't know. So thanks. That was great. A great way to end a really great podcast. It's fascinating, John. I really appreciate it. And I hope the listeners and the viewers get a lot out of that. Absolutely. I couldn't recommend anybody higher than John Parisi. And that's john.parisi at nm.com. You could also,
Peter, thank you very much.
Yeah.
It was a pleasure.
Call me for more information. And thanks, John. That was great. Really loved it.